Hi everyone, welcome to our virtual blockchain event with Alibaba Cloud and the FinTech Association of Hong Kong. Thank you very much for joining us. My name is Stephanie Rose and I'm the director of the Garage, which is Deloitte's Innovation and Collaboration Center. We were supposed to be hosting the event at the Garage today, but unfortunately we can't be there. So Gary and I are virtually at the Garage, and we look forward to welcoming you all very soon once things start to improve. As we can't be there, I just prepared a quick video to show everyone that will give you an idea about what we do at the Garage, and yes, please hope that if you're interested in finding out more, please get in touch with me, and hopefully we can meet there in person soon. Okay, I'm just going to design my screen. So the Garage is a collaboration space. We host lots of thought leadership events throughout the year. We also use it as a space to collaborate with startups and our clients. We host a lot of different types of workshops there. We think we do this secure by design. So the Garage is linked to the Cyber Intelligence Center of Deloitte, and we work with clients to design secure solutions. That was a very, very quick video. We also do lots of other fun things with Lego, and we do lots of design thinking workshops. So yeah, I mean, in the future it would be great to host more of these solutions as the Garage. But for now, I'm not going to spend too long. I will introduce Gary from Alibaba. So Gary Stian is the Senior Solutions Architect, FinTech and Innovation at Alibaba Cloud Intelligence Hong Kong. So I'm going to pass over to Gary, who's going to have a short presentation, and then he'll introduce our excellent panelists for more. Over to you, Gary.
Okay, thank you, Stephanie, and thank you and good afternoon, everyone. Welcome to the event. You know, it is a pity that we can't host it physically at the Garage today, but as you can see, we do our best to you know, even try to do a virtual backdrop just to show you a bit about you know, first of all, thank you to the sponsors as well, FinTech Association of Hong Kong. So for those who don't know, I also co-chair the Cloud and Cybersecurity committee for the FinTech Association. So hopefully that can also arouse a bit of interest for you as well. If you're very interested in joining the association, please also get in touch with myself and also those from the association. Deloitte for helping us, also you know, Peter here for facilitation, and also the panelists that we have this afternoon, who I'll have Peter to introduce one by one, all very you know, speakers that I look up to, and I look forward to you know, providing a bit of insight today. From my perspective, is more from a technology viewpoint, our viewpoint from an Alibaba Cloud perspective, and then hopefully then later in the afternoon, it's about then the sort of the industry viewpoint, both from a you know, blockchain as a technology, but really it's all more about the impact of blockchain from a, you know, from an application, from a regulatory, even from an industry perspective, how it's going to impact us moving forward into 2021. Okay, so I'll share my screen quickly. Okay, do let me know if you can see that. I'll just hide everything. Okay, give me a shout if you can't see it. So really the theme today is it's less about talking to you about from about a product, but really is how we see blockchain, in particular our own experience in terms of the Alibaba perspective, and then how really we're seeing it, using clever use of this technology, helping us to really, accelerate some of the really interesting innovation that's happening around us as we speak. Quickly about Alibaba Cloud. So most people think about Alibaba Cloud from just the base infrastructure, but really we're the technology arm of Alibaba Group, right? So we not only look after cloud, I myself also look after blockchain as capability, IoT, mobility, and big data. So just think of us as everything that Alibaba does. If we do export that technology, it's done through Alibaba Cloud, both from a commercial sense and also from a productization perspective. We spend a lot of effort and investment in the research of blockchain. So in the world, there's close to 400 people globally situated, focused on this technology. And as you can see, the investment that we've done from, since 2017, we've been #1 in blockchain-related technology patent, you can see here. And we will continue to invest because not only does it serve our own digital economy, we can see a lot of customers who is asking for that help, especially as you know, the markets that we play in traditionally, there's a lot of issues or fundamental issues with establishing trust, in particular now with a lot of the rapid digitalization and moving away from sort of physical footprint, right? So that hunger and that desire to introduce the ability to establish a digital footprint in all types of transactions that we do, whether it's monetary, or what I call value or non-value transactions, is becoming more critical as we speak. I want to share with you around our latest technology trends from our research academy. Those who know know it as Damo Academy or Damo Yuan. And if you look at number 6 here, it talks about mass market adoption of production grade blockchain technology is going to change everyday life. And certainly we are definitely seeing it firsthand, right? From an offering point of view, we're seeing more technology vendors, including ourselves, offering blockchain as a service. So really think of it as you're just buying the blockchain technology that can easily be established. So for example, on a cloud environment, and then you can really focus on doing what you do best, right? Which is really making use of the technology, integrating it into your existing business environment, or in fact, creating a new type of businesses or products. But you no longer need to think about, or worried about establishing blockchain technology yourself. So what that's going to do is it's going to speed up innovation, because you're going to see new hard and core sort of algorithm, sort of hardware chips for sort of terminals, for clouds and chains. That's going to be designed for blockchain. It's going to anchor a lot of the what I call sort of global physical assets and what we call on-chain assets. That's going to really stretch the boundaries of the value internet, and it's going to interconnect what we think is going to be thousands of different kinds of chains, right? A large number of sort of innovative different types of use cases and collaboration is going to really emerge, because once again, it's going to help people to speed up the application of the technology. And we're going to see mega large scale production level application that's going to have tens of millions of active users that's going to be made available to the public. Of course, some of what I said just then, some of it's already happening in pockets, but we believe that not within the next 6 to 12 months, we're going to see a lot more, which is really going to be not just in pockets of geographic locations. When we look at the relationship between blockchain and the digital economy era, what we used to do, I think, back in the times, say, for example, during the electricity era, power consumption was the indicator that was best measured for the economic development. Moving into information era, we're seeing that for example, the number of active internet users getting used as a measure of prosperity. And we believe that right now, as we are situated in the digital economy era, the number of innovative blockchain applications and sort of the different, the multi-dimensional connectivities that we're going to see through chains and chains of chains is going to emerge as with a similar status symbol. We're seeing a lot of leading blockchain vendors that have entered the field, both from a technical advancement, R&D, but also sort of commercial applications. We're seeing enterprise stable coins, you know, national digital currencies, and really there's a lot of, I wouldn't call it attempts, right? Or I would say actual implementation now to look at a way to start to reform or restructure how sort of the global financial infrastructure has always been in place. And of course, that's going to bring us some challenges. It's going to really stretch our existing systems, processes. It's going to put a lot of pressure on our existing technology infrastructure. So what we're seeing, because of the advancement of the new technology, if we're going to continue to use sort of what we call the legacy or existing technology environment, we're going to see a significant decline in terms of system performance and, of course, operating efficiency. Okay, I'll skip through this because I sort of talked about it. But back to the fundamental a bit. So, you know, great, blockchain's fantastic, but really what is it about, right? So essentially, putting it in very, very layman terms, right? So it's a network of parties where values actually flow within. Everyone maintains what we call a chain of blocks. In other words, a shared and replicated ledger. The blocks themselves, you can only append to it and effectively makes it tamper-proof. Now, it's not to say that it's impossible to temper it, but like all good security protections that we put in, it's all about making sure that you're not the weakest link. Because as someone who's spent quite a bit of time in the banking industry, hackers look out for always the weakest place to attack. So it's about making our defense or making the cost of fraud much higher, or certainly not as the weakest. So all the transactions needs to be agreed by all the parties before it's recorded, and it's done through, some people call it smart contract and or consensus, but it's effectively talking about the same thing. And then the smart contract itself defines the rules between the different organizations in a form of a executable program. So sort of .exe, right? If you think about it from a user standpoint, and then how we define consensus is really, it's the full circle verification of the correctness of this particular transaction. Then it comprises of a block. The pathway we look at it is going to go from what we call just really consortium. A lot of focus on sort of consortium and public, right? So consortium, you can think of it as Hyperledger Fabric being one of the very popular consortium chains, and then public, say for example Ethereum. We ourselves are venturing into both. So consortium, we are heavily invested in Hyperledger Fabric, and for public, we also are involved in Ethereum. But also, we also have our Ant chain, which I'll talk a little bit more about. It's a proprietary, but it's more taking the public path and also the cross-chain path. And here's just a sample of what we are doing. So we are heavily focused on building up cross-chain technology. So namely between Hyperledger Fabric and N-chain, and it's really the focus. It's about not letting the choice of chain technology stopping our customers, stopping ourselves from being interconnected with the rest of the world of chains. Because what we think is that moving forward, the internet will be a zero trust. So we'll start off not trusting it, and then through the use of technologies such as blockchain, right? So it's going to really help establish that trust. And again, I'm not saying that blockchain is the only way to do things. But under certain scenarios, it may be one of the most efficient or the more efficient way of doing so. Okay, so I added a bit of a cloud slide here, but really it's just a playback of. I want to talk about a little bit about the relationship between cloud and blockchain and what the synergy has done, right, to promote the ecosystem. So typical benefits that you see with sort of cloud, of course, around the cost, the scale, and it really helps people to jumpstart their businesses, right? You can rapidly scale up, you can rapidly globalize, and in fact, contrary to popular belief, actually, if you use your cloud well, you design it well, it's far more secure than your existing sort of what I call offline or on-premise environment, right? I myself have managed multiple data centers. It's extremely labor intensive, it's costly. It is not easy to keep it safe, to be honest. And so if you rely on cloud providers such as ourselves or even other players, you have that trust that you've got professionals who are looking after your cloud, your environment. So when it comes together, what you're seeing now is a combination of cloud and blockchain allows blockchain to become as a service, and because of that, then all of a sudden the ecosystem can focus on what they do best, which is building the ecosystem, building the business cases. Really think of innovative ways of leveraging the nature or the characteristics of blockchain, right? What can you do with blockchain as opposed to, I want to work on blockchain, but no, you don't want to work on blockchain. You want to work on scenarios that are leveraging the perfect coupling, right? Could be on finance. So today we have, experts from that field. In fact, so for example, Mark's in ESG, we've got Zella covering sort of really around the technology, but also a lot of the regulatory, legal, the sort of landmines that we're navigating. Ken, of course, recently moving from ZA into a very exciting new place, focusing on sort of more the STO, really the commercialization part, and of course, Peter here, who's going to be able to help us bring that together as being an expert in in the world of FS, right? So if you look at this commercial, even public services, we're seeing a lot, in particular in China, and also in outside of China, it's really just around where, of course, we're playing a lot of in the Southeast Asia space. So again, we see a lot of use cases from the public sector, of which I'll look forward to share some of them with you in the next over the next 10 minutes. But you can see here, really, it's starting from top down, the solutions, and then there's different partnerships that's going to happen thanks to the ecosystem, and then you see all forms of applications, right? KYC, asset management, cross-chain services, so on and so forth, right? The list goes on and on. But then you look at it and go, okay, how has that happened, right? It's powered by a blockchain layer that can simplify and provides the service. You can consume that as a service. So our offering here, again, I'm not trying to do too much marketing, but we support 3 technologies, so Hyperledger Fabric, N-Chain, and Ethereum, which basically natively rides on our public cloud infrastructure that ensures that you get the security, you get the best-in-class scalability, and so on. So again, it's not looking at things in isolation, but really is looking at it together and see what the business value that can be driven and how we can help to fast-track some of that industry innovation. And here's a snapshot, right? Here's most of the scenarios that we've supported, both in the mainland and also in the international markets. Again, you can see here, it's really riding on the characteristics of what and the value that a technology like blockchain can provide. So product provenance is extremely popular, and it's probably one of the most the easiest or most straightforward cases that can be implemented because it's not that intrusive. to your existing business application. So it's effectively leaving a carbon copy of your footprint onto the chain. So rather than putting the record itself onto the chain, what that allows you to do is, so you might ask, okay, how come the information itself isn't on the chain? Because that's not the point. The point is you're able to have a list of traceable actions that occurred, right, in your digital systems. And at any point of time, you can actually revisit, right? You can actually say that today at, for example, 3:20 p.m. Together we're sitting having this Zoom meeting over this particular topic, and no one can deny that because that record can, once it's written, you can no longer override it. Protection of digital copyrights, wow, that is probably one of the more important, because as everyone knows, right, it's extremely easy to copy things that are online. It could be screen cap, could be just someone trying to download an image or sort of deface an image and so on. It becomes much harder, right, to protect. And certainly we're seeing a lot of usage there. Supply chain finance, very, been spoke to death, so I'm not going to go too much into that. And I think the next one is really around the data asset, but data asset in the form of in a pharmaceutical medical industry, and then there's all sorts of different other ones. I'll let the experts talk more around on the value or sort of digital asset, but in a more of the financial services lens later on during the panel. I bring out DoubleEleven here, so many of you may have heard it. Tomorrow is Black Friday, so many of you will be buying things online, very likely. So DoubleEleven, you can look at it from a transactions point of view, it's about 5 times Black Friday. So why am I showing this here is because you might think, what's this going to do with blockchain? But if you look at it, we extensively use the technology throughout this festival, right? So this year we've done it over a week. So what you're seeing here is sort of the 2019 scenario, but the scenarios that I mentioned before, the product provenance, the digital copyrights, digital identity of our buyers and sellers, people actually getting financing who are participating during the DoubleEleven festival, and even to protect or to establish trust for our flash sales lottery assistance, also empowered by our blockchain platform. Okay, so I'm going to spend the next 3-4 minutes just to share with you, some practical use cases that hope to inspire everyone. That when we talk about blockchain, it's no longer new, right? I certainly don't see it as a new technology. I certainly see it as something that has moved from sort of, by exception to now, it's really moved into the mainstream conversations with our clients. That it's coming up top of mind to them. Everyone's thinking about, okay, how do I make use of it? So hopefully the next 3-4 minutes, I'll give you a sense of that. So one of the first things that we've done between our digital wallets, between, for example, those in Hong Kong, Alipay Hong Kong, and if you try to send money over to the Philippines, you can actually send it real time via Gcash, and it's actually the underlying the sending instruction is actually recorded onto the chain. So that then allows the sender and receivable banks to establish an immediate trust, and then the receivable bank can do a direct credit onto the Philippine side in near real time. Now, what I'll say here also is that the money itself, right, the actual funds are still done through the SWIFT network, and that will still take however many days it needs to take through that infrastructure. But because the two organizations can trust the record that is established on the chain, the receiving bank can see the record that it's been sent, then they can do a direct credit. You can actually, for those who have Alipay Hong Kong, welcome to test it out. I do it quite regularly. In fact, I just did a donation. As many of you know, there was a typhoon in Philippines, so I actually did a donation through Alipay Hong Kong to Gcash. Yeah, to facilitate that in real time. Recently announced we launched Trustpool in the mainland. As you can see, participated by quite a few major banks to facilitate the trade finance portion. Now, how does it work? I'll show you. Really, it looks at really tackling the traditional pain points. And you can see here, right, we've sort of summarized it into your typical, right? We always say it, high transaction costs, long turnaround time, and you always struggle as an SME because you just don't have the financials backing or the records to allow you to justify if you need some form of working capital, and there's always that sort of lack of transparency, or the data is not transparent to those who are involved in this chain of financing. So what have we done? So basically, we've enabled the buyer bank, seller bank, the customs office, the logistics provider to all partake into this Trustpool network, and what that does is it allows the record from the buyers and sellers to be made at their approval, to be made available to those respective financial institutions, so that they can actually see the buying and selling record that they can use as a decision to provide financing, because they can trust that what's happening in that trade marketplace, in this case, could be sort of what we call Taobao or Tmall. They can actually see that someone's done some buying and selling, and therefore they can trust that transactions occurred, and they can also track they link it up with the logistics data as well, so that they know it's not just some fake buying and fake selling. It's actually the goods are being moved along the supply chain, and then some real duties have been paid, right? Real tax have been paid. So all of a sudden, the whole electronic record can all be trusted, and it no longer has to be, the poor SMEs who also always have to sort of take out the accounting and sort of P&L record. And sometimes some of these buying and sellers, they could be just individual sole traders, right? So so this all of a sudden allows them to scale up if they're running a great business, which they wouldn't be able to traditionally. Here is a Australia-New Zealand example, and really from the right-hand side, I'm not going to go for each portion, but if you look at this, it's essentially a combination of IoT. It's a combination of blockchain, combination of supply chain, tracing through, in this case, sort of Fonterra Dairy and Blackmores, right? So many of you may know this brand. So dairy products and vitamins, supplement products, being able to trace through its entire journey from from production all the way to the seller, right? So if you're a seller, you simply scan a QR code, and you're able to find out exactly what happened to your, tin of milk formula, or to your, health supplements that you've purchased through Tmall in this case. In the mainland, it's even advanced into what we call the internet courts. So the internet court, or court of the internet, can actually do trials based on evidence that have been uploaded online. Again, it's backed by blockchain-based technology, and basically they can take the evidence that are directly on the chain into the court. So everything is literally online. Efficiency are largely increased, and really there's the disputes. You're almost fundamentally changing or removing the disputes, because the record is there. Again, it's trusted. You can't really tamper with it, and the court recognizes it. digital copyright I talked about before, and again, so the ability to copyright a piece of content that someone, content providers have spent their, really hard work, right, on whether it's whether it's motion pictures, as you can see in this case. So you can do feature extractions. In fact, it's going to help protect some of our content generators, because they can also use this as a way to monetize and actually turn some of their copyright information into assets that they can control as part of their selling their rights on to people who want to use it, but having an ability to limit that use is also what this piece of technology is helping with. Logistics, talk about it a lot. This is one of the major cases in China, because admission letters is extremely crucial, right? You've studied for 13, 14 years throughout your life, and to lose that last piece of paperwork is definitely very distraughting thoughts, right? So we come up with a way to trace it all the way through, from leaving the university all the way to going through the China Post, which is the national postal service provider, and then through the use of a sort of a client software. In this case, it's Alipay. They're able to extract the status of where this letter is. And basically what it's done, it's gone from a traditional parcel loss, you're talking about a few percent, and this is a few percent with a lot of students and their lifetime effort. Now we're seeing 0%, right? 0 parcel are lost thanks to the use of the technology. Okay, the last reference here is around warehousing, and this is actually quite interesting, because what it allows us or allows our clients to do is they were able to really, they can digitize every piece of physical asset that are situated in their warehouse. And not only does it help them to do their sort of what we call risk controlling, they can actually get credible funds as a result, because they can prove through a digital means that to the banks or the financial institutions that what they say they have in their warehouse is indeed there, right? They can trust that in the form of digital assets. So as you can see through its life cycle, right, going through storage, warehouse, receipt, transaction, and then going through the supply chain, all the way through each of these key milestone of that particular asset that's been turned into a digital asset, right, given a digital identity, can be fully done and exchanged or transacted throughout between each of the institutions, and at the end of the day, it benefits everyone, because gone are the days where everyone's trying to prove that someone's doing a fraud along the way. Everyone can trust the data and use that as form of their what I call the risk control. They can actually trust the data that's been passed through the transactions. Okay, to wrap up, when you think about blockchain adoption in enterprises, don't start off with the technology. Start off with your business scenarios. Start off with what are some of the key characteristics of blockchain that can help you, in particular, if you're in a business that it's difficult to establish trust between multiple parties. Start there. And for example, medical, so for example, video, doctors doing video consultations. That's a recent client that did, right, with our blockchain technology. If you're in the public sector, of course, finance, but again, focus on the business scenarios. And then you look at the technology, and I can tell you that the technology out there is now quite mature, many options out there. We provide some of it, but we don't, of course, we don't provide all of it. but there's definitely an ecosystem of providers that are ready to help you to build your case. And then, of course, how do you operate? How do you participate in the ecosystem? Ecosystem is there. It's here to stay. In fact, for example, in Hong Kong, with open banking coming up, you're going to see all sorts of parties or third-party providers who wants to provide a service. Now, what blockchain will do or how it will help the enterprises and the different ecosystem players to help provide more trust in that ecosystem, yet to be seen. I'm a strong believer that blockchain is going to play a big part in terms of that connectivity and really giving people that who otherwise may not trust each other, but having a clever use of a technology that allows what I call, again, back to digital footprint, so that people cannot deny what's happened. I think it's going to help to go a long way. Finish it off, and it is something that I would like you to take away. If you've been through the .com boom in the 2000s, and you think about it, you're back in sort of the 1996. What's going to happen now? Take it in a similar view of blockchain. If you're sitting in 2020 now, looking forward to sort of 2030, 2040, what's going to happen? I'm not sure, but I can definitely look at it and say that it's a good time to come in right now. Okay, I'll finish up here and I'll hand over the stage to Peter, who will kindly help us moderate the upcoming panel.
Thank you, Gary, and then good afternoon, ladies and gentlemen. Well, we are honored to host such a discussion or maybe webinar here, talking about blockchain, whether it's the next generation and network, and how this can actually provide the business opportunities and chance to us. Then allow me to quickly introduce our speakers and panelists here, and then feel free to supplement with my limited introduction. And as a gentleman, sorry, and we would like to introduce Ursula. Ursula McCormack is a partner of King & Wood Nelson. And then she is specialized in this, I would say, FinTech legal advisory. And then we have Mark Black, Diginex Solutions, and then he will actually tell us more about different aspects from tech and fin. And then we have Ken Low from Hong Kong BitX, and then the virtual experts. And we'll let Ken talk more about himself and his view. And again, we're trying to bring Gary San again, and from Alibaba Cloud. And maybe you don't want to listen to him much because he has been talking about over an hour. Just kidding, okay? Anyway, if you don't mind, allow me to post some questions, and then for the panelists, and feel free to talk more about maybe yourself, your background, and even some of the questions. The first one is kind of simple. Then we're starting with a survey that Deloitte actually conducted in 2020. Deloitte conducted a survey called Deloitte's Global Blockchain Survey, and 83% of the respondents believe digital assets will serve as a strong alternative and will outrun as a replacement for the fiat currency in the next 5 to 10 years. Then, interestingly, the highest emission of that would be the China mainland. Then over 94% of the mainlanders agree to the same. And interestingly, with over 5,000 cryptocurrencies in the current marketplace, then what kind of potential or what any other potential you will see in the virtual assets besides simply replacing the fiat currency? Then, if you don't mind, maybe we can start with Ursula.
Yeah, sure thing. Well, look, first of all, I'm going to proclaim that cash is not dead. And whilst we are renovating the infrastructure for money and for payments in all sorts of interesting ways, it's very interesting to see cash remaining quite a priority for a number of jurisdictions. Japan, Norway, even parts of the US, still seeing a role for cash going forward, and also looking at the potential systemic risks of going all digital. But leaving that aside, there's a huge amount of renovation that's going on across a number of systems to facilitate not just the launch of digital tokens that facilitate access to a platform like we saw with utility tokens, but also an enormous amount of development to launch things like digital bonds, other types of digital securities, fund interests, asset-backed securities, the lot, right, as well as just tokenizing assets. Lots of interesting challenges with that, making sure that there is a great link between the real world and those assets. But that is, the real story around this. The next piece to that is then linking with CBDCs, as we saw the likes of SocGen do through an experiment with the French CBDC. And of course, we will then see the linkage into digital ID to facilitate that digital economy. So there is a lot that we will see in the next 5 years.
Thank you, Ursula. Mark?
On the same question, and this is outside of my area of expertise, so I'm happy to pass over to the other panelists. I think I can come back to the questions of outside of the world of digital virtual currencies and central bank digital currencies, where can we see the adoption of blockchain? And I'm happy to talk about that from a supply chain provenance perspective and also an ESG data perspective. As a high-level note, I think has been mentioned before by Gary that the real value add lies from a move away to a degree, at least from a paper-based process or at least a manual process, and the fact that you would use an orchestrated workflow amongst a bunch of market participants that happens to use DLT, that gives you better cryptography, it gives you some interesting workflow options, and maybe it gives you some deterministic computation, but really it's just a design choice. I think later on in the panel, when we come to questions outside of virtual currencies and digital currencies and how blockchain might help, I'll be happy to go into that in more detail.
Thank you, Mark. And how about you, Ken? What's your view about that?
Yeah, I think it's a great question, right? Because we also see, at least from Hong Kong regulatory perspective, right? So virtual assets or interchangeably digital assets in different jurisdictions. So includes cryptocurrency and security token offering STO as the broader perspective, right? So I think cryptocurrency is definitely here to stay, right? Given there are a lot of established companies in the Europe and US also announcing that they would purchase this as one of the investment assets. But I think more interestingly is also the emergence of security token offering, which can unlock the value of a lot of the assets that could not be tradable and also fundraised. And now there's a regulator and alternative fundraising channel for such, i.e. The IP rights, real estate, etc. Right? So I think this markets the asset class that even for professional investors, including high net worth individuals and institutional investors, like banks, insurance, and pension funds, they could not able to access this, right? But through this technology, the tokenization support, and also the right regulation regime, right? This would serve to be a very interesting asset class that would be an aspect that would be interesting to watch.
Thank you, Ken. And Gary, what's your view?
Yeah, I take a similar view to Ken. But I actually think, look, I think the potential in terms of digitizing assets that we probably never think of, someone would try and actually, digitize it and slicing it up into what I call investable chunks, right? I think it's gonna be, look, I think 2021 is going to be an explosion of what I call mass retail access into asset class that they previously wouldn't be able to get to, right? So I think Ken briefly mentioned around even stuff like the antiques, right? things that they can probably general consumers who never touched before can all of a sudden become available, right, through just simple access of a token of value, right? But it could be, you know, 1/10 of a million or something like that, right? Whatever amount it may be. But of course, the regulators might go, whoa, hang on, don't go so crazy. But I don't think they will be as quick as what the market will do, right? And I think there'll be people who will take, you know, who will run very fast and turn really, you know, things that somehow find a way to get people's interest into investing in something that people actually think makes sense. But of course, then how do you protect? Because blockchain itself is not going to protect the whatever asset that is behind that securitization. So how do the consumers look at that? You know, if I'm, you know, investing into an antique, will I ever be able to see it, right? Even though I have a coin around it. I'm not sure how we can control that, but I definitely think that that's the kind of scenario that's going to happen.
Yeah, I might want to jump in to echo what Gary mentioned. I think given security token offering in Hong Kong is regarded as securities, so everything needs to be regulated, compliant, and in a safe manner. So the approach and proposition will be definitely quite different to cryptocurrency or the ICO era 3 years ago, right? And having said that, from our perspective is we will see the involvement of intermediaries and service providers, i.e. the law firms, the accounting firms, the surveyors, etc., right, will still play a very important role, right? So that I would say is fostering the strength of Hong Kong as the international financial hub is how to leverage the existing and very matured capital market infrastructure and also service provider proposition, right, to embrace a new asset class, right? So that is also very exciting because that could bring a new energy, fund flow, and also talents, right, for Hong Kong market.
And I think what we've seen is that, yes, the pace is swift, but, you know, we had a lot of interest in STOs when the ICO market tanked in 2018. A lot of people thinking, well, look, STOs are going to be the salve. They're going to solve everything. We've got our next hype cycle. And actually, there's a lot to think through. And I think the real learning for many in structuring, say, the tokenization of an antique piece of art, real estate, a ship, you know, we've seen it all, is that you still have to rely on a lot of legacy structures. And what I mean by that is not necessarily technical infrastructure, but the fact that somebody needs to look after the asset. Somebody needs to be able to clean and moor the ship. Someone needs to make sure that the real estate is there, that it's rented. And so you see that a lot of the traditional kind of players still need to be involved in some way, but there are a lot of processes that can be streamlined significantly, and that's where, you know, securities are obviously you know, a great example. Lots of processes that can be simplified, but when it comes to tangible assets, there's still quite a bit to resolve with the real world aspect of those assets.
Thank you, Rishma. Thank you, Ken. I think it's a very fair comment. Well, no matter what, how you get things digitized. And we still have the, maybe using the IoT term, the O2O. We still have online and offline. And it's not totally like everything is digital, offline, paperless. There are still some room for the professionals like us. Anyway, well, because Ken actually moved us to the question 2, then allow me to talk more about the regulatory part of it. Then, well, basically early this month, November, the Hong Kong Financial Services and Treasury Bureau, they issued a public consultation for seeking views on the new licensing regime for virtual asset service providers. Also, SFC also mentioned earlier in the Hong Kong FinTech Week that they are going to regulate all virtual asset trading platforms. It seems like, well, the Hong Kong is trying to push more on the regulation and the supervision of virtual asset trading and even further development and growth of this industry. With the increased use of blockchain And then, well, with these kind of applications, and then while people are being more confident in virtual access, and then it's getting about the right time instead of like 2 years before. And what are your speculations or expectation or foresight on the upcoming regulatory framework, and then how this can help us to grow further in this domain? Then, well, again, coming in this order, Usler, do you want to start first?
Yeah, sure. As a lawyer in the room, for sure. Well, look, so the starting point is that this is an absolute priority for Hong Kong. And the reason for that is that the Financial Action Task Force recommendations of last year effectively require jurisdictions to apply AML measures to virtual asset services providers. And already we're seeing jurisdictions that are tested against that standard. The Philippines is a good example. And what that means is that if Hong Kong is not compliant, it moves to a partially compliant phase, or a non-compliant in a worst case, and that's bad. So, you know, that is it's an imperative to implement something to address that. And basically what we're seeing are legislative proposals to plug the gaps that are still there despite the opt-in regime that was implemented by the SFC a couple of years ago. And it means that the whole of the sector, as far as exchanges are concerned, will fall within this framework if it goes forward. Now, one of the key things to know is that this framework, if adopted, would at the initial stage result in virtual asset exchanges only being available to the professional investor segment. And that is a particularly contentious issue, and it has some pretty significant systemic considerations, as there's a very wide availability of DeFi platforms, you know, decentralized exchanges, you know, peer-to-peer platforms that retail can access. And so it means that you will effectively push that segment into the unregulated side. So lots still to consider. There's still not a lot of detail around all of the standards that will be applied. It will come under the AML legislation, not the SFO. And what that means is that while the SFC is the frontline regulator, there may well be a difference in approach in regulation as between that and traditional securities players, although we really think that there'll be an alignment over time on things like custody standards, insurance, you know, conduct by individuals and so forth.
Thank you, Ursula. Mark, what do you think?
I think it would be difficult to improve upon Ursula's answer. So I'm happy to pass my time to Gary, Ken, and the others. And again, this is not my specific area of expertise within virtual assets. What I will say, just to echo a point that was made earlier on, and perhaps build on it. I think within the world of technology, and to a lesser extent, finance and regulators, that the technology is broadly understood. But as somebody who spends almost all of my time trying to get adoption of technology outside of those three industries, there is still a high degree of misunderstanding about what it is, and skepticism. And I think the issue of blockchain having an image problem persists. I think the image problem is a different one to what it was in 2018. And now it's evolving more around a misunderstanding of what does it mean to store data on a blockchain, and what does it mean from a GDPR perspective. Whereas 4 years ago, it was, does it have the same carbon emissions as Denmark or some other non-provable fact? So I think that whilst it is understood perhaps by most people on this call, and in the world of virtual assets and technology firms, I think outside of that, there's still a degree of misunderstanding that needs to be overcome before we see broader adoption.
Thank you, Mark. What do you think, Ken?
Yeah, I think from a broader perspective, right, we also noticed that cryptocurrency is increasingly fall into regulations, right, compared to previous years. So that is like a macro trend to follow through. And having said that, I think different jurisdictions has their own approach in dealing with that, right? The second point is I think with further regulations, right, and given the SFC virtual asset trading platform is focused on professional investors, so there infers to the inquiry right now in our ecosystem is how should the retail customers, right, be reacting to that? How should the customers being handled, and how could they have a legitimate or regulated channel to really continue their cryptocurrency purchasing and selling, right? So that is still a very interesting area. I believe a lot of the players in our Hong Kong FinTech ecosystem will be raising as well. And from the paper, it has some mentioned on the derivative side, right? So would that be fall into something that would be an interesting product that could be provided by the future licensed platforms, right? Because if you look at all the product to be traded globally as well, derivatives is one of the hottest product. And if you see some of the latest uptake by CME, right, that is huge, right? So would Hong Kong be able to capture similar flow, right, by reinforcing the statement that more fund flow, including high net worth individual family offices, could be setting up their offices in Hong Kong, right? And that is also being reinforced, right, by the policy address yesterday. So I think this is definitely a good sign for Hong Kong to grasp upon. But as Peter, you mentioned, right, the public consultation will end till 31st of January next year. So FinTech Association of Hong Kong here, we are also very keen to collect different members' feedback, right? So if anyone has such feedback towards the public consultation, so FTAHK would be one of the channels, right, for you to flag through around this, right? And welcome to reach out to any one of us within this ecosystem to shape the idea for the upcoming new era for this aspect.
Thanks a lot, Ken, for promoting the FinTech Association Hong Kong. And then all the audience, we're all welcome to make a comments and direct it to Ken. Yeah. And then the last but not the least, we have to actually get back to Gary. Gary, the host here. What do you think?
Yeah, so I think sort of similar. I think both the previous speakers almost spoke everything that I wanted to say, right? But I do think I spent a lot of time reading on the policy address yesterday on the impact, and I think sort of the last point that Ken mentioned, you know, all of a sudden the focus, right, of family office was so explicit, and I thought about, you know, why, right? I think partial is around the policy needing to, of course, you know, help the economy to recover, right, in Hong Kong. I think inflow of funds and of course, yeah, family office are often basically sophisticated investors, right? You're not going to have a not unsophisticated family office. So so what that means for the framework, I think I'm not sure if the framework when it came out for consultation expected the policy address to sort of take that particular spin, right? So it'll be quite interesting to see how they sort of look into that. I think the retail side will be interesting because I'm not sure if having a regulation that sort of rules out or all of a sudden push because often if you think about it, you know, having dealt with regulators for over a decade, often it's the unsophisticated investors that gets most impacted during any form of crisis, right? It's not usually the sophisticated ones, right? It'll be the unsophisticated customers using sophisticated products, and then they get burnt, right, as a result. So how does SFC, you know, I'm sure the market will be giving them a lot of opinions, but how do they strike the balance so that it allows the retail market, but of course those that I think should be well researched, or the ones that are they're what I call sophisticated retail investors. I don't know if it's such a term, but to still be able to not be ruled out of the market, because I still think Hong Kong as a location, or whether this particular new asset class, you know, it's new. You know, of course, there's a lot of unknown, but I don't think sort of a drawing a sort of a hard line is great for the market participation, right? That's just my point of view.
Yeah, and look, I'd raise that there's a few tools at the SFC's disposal in relation to suitability assessments. We're starting to see some other jurisdictions also broadening their definitions of what constitutes a professional investor. If you think about a lot of people who are potentially holding onto their crypto in the current market may well be very wealthy, but don't meet the test of a professional investor because they don't have cash in a bank and securities that amount to the necessary 8 million. So, and they could well be much more knowledgeable, right? You know, in that than you know, the average punter who meets the asset test. So, you know, clearly there is a need to be able to bear loss, and that's why we've got monetary thresholds in the professional investor definition. But you know, there are lots of other ways to go about this, and it's good to see some creativity amongst regulators globally around that. And it's not just about crypto, it's also small scale fundraising, which I think is also perceived to be a bit of a blocker in allowing more people to benefit in growth.
Ursula, well, I was flagged out, or we have only 10 minutes left, but I think we're trying to stretch a little bit. And anyways, come to another question. And in 2018, the Bay Area Trade Finance Blockchain Platform, initiated by the People's Bank of China, they started actually recruited 38 banks to join the platform. And then it appears the Shenzhen Municipal Tax Bureau introduced blockchain e-invoicing. And then they already issued 18 million blockchain e-invoices. And according to Lois, the 5 blockchain chains for 2020, there was a respondents brought up the 4 major industries, namely technology, energy, manufacturing, and healthcare. And they predicted these organizations, they may invest over 40% on blockchain technology in the upcoming year. And from your view, any business cases or interesting blockchain stories you would like to share with us? And how about we start with Ursula?
Yeah, well, look, you know, actually, blockchain really lends itself to those boring points that, you know, that many of us don't think about. You know, it's not necessarily the shiny things. It's those processes that, you know, are liable to fraud, like invoices, where banks have suffered significant loss in the past, and facilitating cross-border trade. So I think the Hong Kong Thai CBDC project is actually a really interesting one as well on that front, because it's all about trade and FX and dealing with an actual problem statement. So you know, that I definitely see you know, as an incredibly significant one. So I'll give that as an example. Leave to the others to come up with others.
Okay, thank you, Ursula. Mark.
Yeah, so I'm happy to talk about cross-border potential or actual technology projects. I'll go for not specifically the Greater Bay Area borders, but the work that we've been doing around the flow of people across borders. If I go back to 3 years ago when we started looking at this topic, and for us, our mandate was very much to find good projects, and by good projects I mean those that had a good impact, that would help to validate the technology amongst what we consider to be some of the world's most conservative stakeholders. And in that, we started looking at the interjurisdictional flow of migrant workers across complex supply chains, particularly in Southeast Asia, South Asia, and the Middle East. And in that, we're now working across 10 different countries and 3 different large migrational corridors, inter-region and intra-region. And we're involving governments from the US government, UK government, Philippines government, GCC governments, and the Thai governments, as well as multinational companies and civil society in folks like the United Nations and several parts of the United Nations. And of course, the most important stakeholder group of all, which is the migrant worker who are traveling between different countries. And how do we solve for various different issues? So on the migrant worker side, the issue is around risk. And going back to a point that Gary made right at the beginning, it's not about the technology, it's about the issue you're looking to solve for. And we're looking to solve for 2 issues. Does this make my life safer? And does this make my life easier? And if it doesn't, then frankly, the technology is irrelevant. But if we can bring the technology to bear on solving those two questions from a migrant worker's perspective, does this make my life safer? Because I'm not at the risk of forced labor and modern slavery, because I am able to prove documents and contracts and medical certificates and visas and invoices for reimbursement and all the other paper documentation which are currently looking to carry across with them across borders, and which are often substituted for just duplicated and changed without their consent. So that's from the ground up. From a governmental level, it's about how do I regularize informal workers in my economy so I can start taxing? And we work on that extensively across Southeast Asia. And then the flip side of that is if a worker is regularized from informal to formal and they are starting to be taxed, but then they're eligible for benefits and all the other support services that governments can offer in that country. And then from the corporate point of view, companies who have complex supply chains across many different countries who are at the risk of being caught using forced labor and modern slavery in the tier 1, tier 2, tier 3 suppliers. How do they avoid being on the front page of the Wall Street Journal? How do they avoid being on a news story in CNN of having child labor in Bangladesh or having folks catching COVID in dormitories in the Middle East? And how do we help raise transparency in the supply chain? And for us, it's all about data collection and data provenance and document handling. How can we share data between all of those different stakeholder groups that I just mentioned? So the migrant workers, the intergovernmental organizations, the governments, the companies, and the auditors as well. And you have various different stakeholders around that, but it's about building a digital panopticon. So how can transparency deter bad behavior because everybody is aware that there's greater levels of scrutiny and transparency on the data and documents that are flowing through those migrant worker journeys. And so if I am a company, I understand, not to a perfect degree, but to a much better degree than currently, who was working in my supply chain. And if I am a migrant worker, I have much better access to fair and transparent routes for migration. And if I am a government, to have the ability to tax a larger proportion of the informal sector. And we put all those together, and that's what we're currently doing across 10 different countries. And I think that's where the technology is useful, where you do have multiple stakeholders who are looking at data which they don't trust. And how do you improve that trust level? And then having improved the trust level, you can start improving the efficiency of the process. And that's really what we're doing. So to go to Ursula's point, a lot of it is around improving the boring aspects of process. How do we move away from people onboarding workers with pencil and paper, which happens a lot, move it to digital, and having created that digitally, how do we integrate that with the local Ministry of Labor? And having done that, how do we integrate that with the corporate head of sustainability who's sitting in DC or sitting in Geneva or sitting in London or somewhere else? And that's a lot of the work that we do. So interjurisdictional is very important. Process improvement is very important. Digitization is very important. And from the user's perspective, frankly, as I say to most people, like if you go back to your desk and you save something and it goes and stores on a cloud, walk me through what actually happens. And 9.5 times out of 10, no one has any idea what happens. Like they press save and it saves somewhere. They can't talk you through the process. And I think that's part of the issue with blockchain. People want because it got hyped up so much, people get too hung up on the process. So really from a front-end perspective, it should feel like an enterprise software platform, or from a migrant worker's perspective, it should feel like an app. It should be integrated into the social media platforms they're already using. The ease of adoption should be as low as possible. And that's what we really focus on, is how to make this look and feel as much as possible. And whether it's stored on a cloud somewhere or stored on a distributed ledger really doesn't matter that much from a user's perspective. And it's all about then the questions I raised at the beginning, people having concerns around, well, what does this mean from a GDPR's perspective, and explaining to people what is not actually the passport that gets stored on the blockchain. It's the event history around that, and helping people understand that is a lot of the work that I do too. So I hope that answered part of your question.
That's such a great example. You know, the other, you know, that ability to impact people's lives. You know, it's very easy to forget in a very heavily banked a society that you know, identity is effectively a privilege, you know, to have. And you know, we've seen World Food Programme also deploy blockchain for Syrian refugee camps, and lots of really interesting, like actual impactful, you know, applications in that space.
Thank you, Mark. Thank you, Ursula. Ken?
No, I think and Mark gave a very a good examples around that, right? I think we are going through two stages, right? One is a lot of the assets are being digitalized, and one of the lever is leveraging blockchain technology, right, across different in that industries. I think the last mile where I say linking back to what Peter you mentioned around the public consultation is about the regulated platform, right, for secularization of fundraising, right? So going through, right, I think there are a lot of the jurisdictions, especially mainland China, they're adopting and advocating the blockchain applications, right? A lot of the assets are digital native going forward, right, are on the blockchain from the original data, but it might take a few years, right, to realize this stage. And how do we do the fundraising, right? Is there a role for Hong Kong leveraging that? I think there are a lot of discussions around how Hong Kong, right, using its role as international financial hub to broaden its expansion in the digital economy, or we are still doing what we are doing well from a traditional perspective. So, so there are two different lenses when we want to look at how blockchain technology is applied.
Thanks a lot, Ken. And how about you, Gary?
Look, I think as part of my presentation, I shared, and you can see it's all sorts of possibilities that you can do, right? And I think I like what Mark said. It's, to me, blockchain, it just becomes an underlying infrastructure that it should be, you shouldn't even say it, right? It's like, we don't actually say, hey, I'm using the internet right now to do this Zoom call, right? It's just, I'm using Zoom right now, for example. So I think in the future, in fact, in now, it's, there's a lot of things that's already happening that are applying the blockchain technology, and people don't know about it, right? So I mentioned about sort of China Post. I'm sure people who buy things on e-commerce platform have no idea that there are things that are going onto blockchain. But what it does do, I believe, right, and what we will see more of, what we say is around people will start to use or to market blockchain in a way to show people that going full digital with your particular process is trusted because I have an ability to show you that digital footprint. I think that wasn't, it's not to say that wasn't possible before, prior to blockchain, but it's saying that, hey, I have something that is extremely hard to do fraud on, right? To change the record that are happening to the system. But now, oh, if you want to dispute, no problem. I will show you, right? I will take this record out. I'll show you the digital footprint of what has just happened, and then we can take it to the courts, right? And let the courts decide what, who's right or who's wrong. But no one is, I think, disputing the transaction history or the record that's secured by the use of the technology. So I think and as a result, I think there'll be a lot more new ways of doing things that are pure online, which wasn't thought about previously. Like I mentioned before, I think a lot of what I see is sort of online medical consultations are now using blockchain as a footprint, right? Given it's so sensitive, and it's all about the doctors and the patients protecting each other, right? I think that's part of it. So I think it's going to enable a lot more to be done on a pure online form.
Thank you, Gary. And actually, it's coming close to the end, but before we get this to the floor for open Q&A, then I want to ask you another question. Well, we have observed blockchain, like Gary mentioned, can be used or not be used, and online, offline, then from time to time. And then there's no major killer app, say, without blockchain, you cannot do it at all. And I don't know whether the new initiative, it's not new, but the kind of the initiative of DCEP, the digital currency electronic payment, which is coming up. If it turns out to be like everybody got an electronic e-wallet, and it's a must to carry it around. Then, and we have observed lots of multinational companies are getting interested after China announced the DCEP implementation and even roll out in different proof of concept in a few cities. And then what do you think? Well, for local or even global perspective of DCEP is getting popular, whether this can leverage blockchain technologies, and then how this can change our life, and whether this is a killer app. And lots of countries are trying to roll out their own DCEP other than China, say, heard like Canada, Germany, and then Finland, and even Thailand, and then lots of them, and even Libra, they're all talking about that. And what do you think as our final round of questions? Who's left?
Yeah, I mean, look, I think that the key thing, in terms of kind of looking ahead is to start to think about the integration aspects, with existing systems, but also to consider how, we've talked a lot about financial regulation, but we haven't really talked about data regulation, and we haven't talked about human rights regulation, anti-discrimination principles. And so, there's a lot of really interesting stuff that's going on in blockchain that aids transparency, but that transparency that helps us with things like AML, steps, also significantly erodes privacy, and privacy is protected. It's protected in the basic law of Hong Kong. It's protected in constitutions the world over. It is a fundamental human right to have a sphere within which you're able to be private, not totally anonymous, but private. So, I think that discussion will be a very important one. And I say this a lot on panels like these, but we're seeing privacy regulators strengthening. And we're also seeing more active human rights commissioners. Good example being in Australia, where I'm at the moment, where we have a very active human rights commission that's looking at the impact of technology on human rights, things like biases in algorithms, and the impact of using things like digital identity or very, very, rich data sets around individuals to make adverse decisions. So super potential, but I think also for those who are building, it's important to look ahead to those headwinds.
Thank you, Ursula. And what do you think, Mark?
I tend to agree. I think it doesn't need to be a killer app for blockchain adoption to be deemed successful. And I think having that as a goal misaligns expectations. I do think when cloud computing came out, we said, well, what's the killer app for cloud computing? And blockchain ultimately is just a new way of storing stuff. It has certain different rules to it. I think that all the things, well, from my point of view and the work that I do, all the things that Ursula raised are exactly the issues. If you store things in a slightly different way, what does it actually mean for people from a privacy perspective or from a human rights perspective? And until we can resolve the legal and regulatory infrastructure around those types of questions, it's going to be quite difficult to roll out too much or much more quickly. So if I look at like grievance is a really obvious one within supply chains. I am a migrant worker and I want to submit a grievance against my employer, and I want that grievance to go to an NGO and I want it to go to the government. So who has the right to see that grievance? And if that worker leaves that factory, what happens to that grievance? And how do I make sure that if that data is stored in such a way that it can't be changed and that it is transparent? Transparency for transparency's sake is not a good thing. We don't want 100% transparency, because if you're submitting a complaint against somebody, you want that complaint to not be transparent. So how to understand the ramifications of the storage, I think, is almost more important than the storage itself. And I think that's what a lot of the questions that are now being raised is to, okay, so now we're storing things in a different way, which is great, and that opens up lots of possibilities, which is cool. But what does that actually mean for a person, and what does that actually mean for a company? And what are the downsides to that? And I think that's a lot of the questions which need to be worked through before the types of people that I'm speaking with are comfortable, because frankly, they're not. And I think blockchain is often a double-edged sword, because often it gets you the meeting because people are curious about it and it's kind of catchwordy and buzzwordy. But then it has these strong misconceptions, and people still think, okay, well, what does that mean? Like, I store my data somewhere and other people can see it, but I don't want that. And until we can effectively articulate what that means, not just at a company level, but at a country or a regional or global level, it's going to be very difficult for companies to say, okay, let's go for this at scale, because they don't fully understand what that means. And And advocates on the human rights side will say, well, I also don't fully understand who holds that data and who has access to it, and what happens if a benign force today is not a benign force tomorrow, like who controls that? So I think there are all these difficult questions that need to be resolved in parallel to the actual data storage side of it.
Thank you, Mark. It's definitely a difficult question and challenging one. And what do you think, Ken?
Yeah, I think for CBDC, if we broadly categorize as the wholesale and retail, they're solving different problem statements, right? One is solving for the liquidity and nostril accounts, right? Meaning the capital fund flow between the banks themselves, right? So these are really not relevant to any one of us here, right? But if you talk about the retail where we see more test cases in mainland China, right? While the other jurisdictions are focusing on wholesale, right? So this, to me, basically are different paths, and the technology application from using different blockchain features will be entirely different, right? And I think if we just zoom into Hong Kong, right? How does Hong Kong role would be, right? How does Hong Kong could be connected to the other international jurisdiction where they're focusing on wholesale? And with that, right, how could Hong Kong be connected to DCEP with focusing on retail? So if hypothetically Hong Kong could do both, this will be the only city or jurisdiction that handling both. Right? That's exciting, right? But the question, I think, for all of us is whether we have enough talent and capacity to handle this, right? Is that a regulatory or government-driven agenda, or there could be market force consortium to do this? So to me, this is an exciting opportunity, but whether we can capitalize or we pass it on and wait, right? I think that would be quite a essential topic to really fostering some momentum to drive forward.
Thank you, Ken. Then Gary, coming back to you again. Back to
me again. So two parts, right, to the question. So my view, CBDC, DCP, like I kind of said, right, I think the government to government side between different central banks, I think it's a more efficient use, or potential more efficient use of medium of exchange between the different central banks. I honestly think that for the retail side, there's all these speculations, right? It's gonna change everything. It's gonna fundamentally impact the way we do things. I'm not yet convinced, because I think we need to remind people that what it is a physical cash replacement, right? It's an M0 replacement. So does it have the potential? I'm not sure, right? I'm not sure if the government is interested in becoming a payment wallet provider, right? I think they're interested in making sure that the cash gets spent properly, gets to the right people, right? So that people can spend it. But there are people out there saying, oh, it's going to take over the existing wallets, and I'm like, I think it's doing two different things, right? So the wallet the payment wallet simply connects to this cash wallet and withdraw the cash balance, right? It's just a cash. It's not going to go and talk about, oh, here you can buy train tickets on the government, DCP wallet. I think people, I'm not sure if the regulator is interested in doing so, right? I'm not sure. So that's one. I think killer apps, I take the viewpoint of Mark, right? I think it just becomes a tipping point, right? There'll be a critical mass, and then when it becomes so seamless. But I do believe that the fundamental usage of it will be focused on the ability to turn, first of all, to turn something into a trusted digital asset, right? It's about the fundamentals around building trust. So as long as the industry is focused on, the ability to allow digital transactions to have a footprint that can't be tampered, I think that in itself is for me, it's the killer value that's going to help what I call a zero trust internet to be trusted again. And also, I want to throw it back to Peter, right? from a consultancy point of view, the clients that you see, I want to ask for your view as to what are you seeing, just personally and also from a firm perspective.
Well, thank you for passing the buck back to me.
We didn't stage this, by the way, just for everyone's information.
Well, it actually caught me off guard, but I tried my very best. In fact, we have observed the trend is actually going up. And there are lots of different applications, as Mark and Usler and Ken mentioned about. And then, in fact, we have observed different applications, say for the supply chain, and then the Industry 4.0, Internet of Things, everything else. But to get it run a little bit faster using the blockchain technology is still missing a major killer app. And then that's why our last question is to ask whether DCEP will be one of those, just like the cash carry in your pocket, even if it's digital, then whether this can get it a little bit faster. And then the other thing is like taking one of the so-called, we call ourselves professional service firms these days instead of accounting firm. And one of our major businesses is audit. Then Ursula actually mentioned a little bit our difficulty is say how to audit if everything gets so digitized, paperless, and on blockchain. And then that's why we were one of the first one to roll out with a blockchain audit checklist. And then even lots of the audit work, especially those routine one, we got them kind of automated. We use AI tool, and then we use some kind of robotic process automation, and then even get them locked down semi-blockchain. Then another question is quite challenging. If the source data basically checked in blockchain, should we double check the source data again as an auditor? And this is still a question. The next generation of accountants and auditors, should we be technology knowledgeable, or just I know nothing about it, but I can rely on the robots and the AI to do this for me? And there are lots of question marks. But with our Deloitte approach, then the traditional general auditors basically get trained on the tech part of it to equip us better, not only Fin, but also tech. And then even for the tech person, we try to equip them with Fin and the business knowledge or the domain knowledge to get ourselves more ready, because from the stacks we showed just now, the next 5 to 10 years, no matter DCEP or other blockchain technology applications, will further boom, like it or not. You think you can do it offline or use some other technology, but it's inevitable. People would like to have something more organized, with recording and then maybe with less errors, and then they lock down. Although blockchain is not everything, but it would certainly help to facilitate these processes. Then maybe for Ursula, then where any contracts or source data can be blockchain, can ease her off on her regular check on documents. Then in short, we are quite optimistic to take a stand. The blockchain and the FinTech technology will boom maybe less than 5 years. Maybe for the next talk, if we talk about FinTech with a broader scope, we can tell you more of our stacks. Okay, and well, thanks for asking me and putting me under the spotlight, Gary.
You're welcome.
Okay. Before we are trying to call it a day, then actually you got a question here from the audience, and if you get into the chat, and then there's one of the attendees ask you a question, see whether you can read it a little bit, and well, the audience really admires you. According, this to start with the tag. Seems like a quote from Steve Jobs, and wow, see you can tell really more about the journey of pulling different parties into buying in the tech, and then how to determine whether blockchain is the right tech or well, some other alternatives. And Gary, can you help to answer the question?
I'll have a first hit at the question. Yeah, so I think the buy-in was, I really asked, I think when we speak to a lot of clients, a lot of them come and say, Gary, I want to do blockchain, right? And I always tell them, then I think we can end the call like right now, because I don't think you've thought about what you need to do, right? So it's impossible for me to help you design a solution. But as we drill down, I think often, I think the buy-in part becomes obvious when we look at the what existing problems they have, right? Now, this is even without mentioning the word blockchain, right? So what are some of the problems, the fundamental problems that they have today that they're trying to solve for as part of, digitizing a particular a process or a use case. And then the value becomes very obvious when we start to draw into the fact that they have issues, for example, with trusting the party that they are, trusting their counterparties, for example, or they have more than a number of different counterparties that they need to interact with. And they find issues with reconciling, for example, records or systems of records. It takes a lot of time, it's inefficient, there's always issues in between. And then so after we then focus on, moving away from the technology itself as to, okay, actually, you know what? In a point of dispute, you can actually take the records out. And like Mark mentioned before, that doesn't necessarily mean that you've uploaded everything into blockchain, right? What you've done is you've uploaded the footprint, right? The footprint of the transaction, the timestamp as to when it's happened. And all of a sudden, it makes sense, right? It gives them a platform that it's almost supported by blockchain as opposed to, I'm using blockchain. No, you're using the overall application, right? You still have to build an application on top. Blockchain itself is not going to solve you anything, right? It's like using iOS, right? You're not going to go, oh, I use iOS today, great. Now what, right? What are you doing? What are you doing with the operating system? So I think, yes, there will be a lot of parties. Some will get caught up into the word blockchain because they want to look cool, right? A lot of people want to do that. They want to be seen as that they're innovating. But I think when they look beyond the technology itself, when it comes to then having a proof of work that helps people that they work with to build trust, and then becomes quite easy to get buy-in.
Thank you, Gary. And due to the time, may we ask all the audience any other question? Maybe just one more question for the panelists here. I'm going to count once, twice. Okay, thank you very much for all the panelists here. And then we are honored to have all of you share your views and then bring through different ideas and different topics. And I'm quite sure we'll have a sequel very soon. And then blockchain is only a start. And then there are lots of other FinTech related topics. And with the booming market in the financial area, we will say it's going to be the more the merrier. And look forward to seeing you in our sequel. Thank you. Bye now.
Thanks, Peter. Thanks, everybody.
Thank you. Have a good weekend. Cheers.
Thank you.
Bye-bye. Thank you very much.
Bye-bye. Bye-bye.